Well, our forecast is 125,000 for payrolls, which is kind of close to the consensus. I think the risk, of course, is going to be on the downside on this, and we know that DOGE job cuts could start filtering through into the payrolls numbers. So that could be a concern. But look, I think for the dollar more broadly, we still think the dollar hasn't priced in the impact of tariffs at this stage. There's a lot of lack of clarity at this point in time. So it also depends, we've got April the 2nd ahead of that payrolls report. If we see some aggressive news on tariffs, that could actually support the dollar. And so it really depends for us on how that chain of events happens. Is it going to be April the 2nd, significant tariffs, dollar finding some support on the back of that, and then, of course, a weak payroll. So it's going to be a bit of volatility at the least. But we do think the dollar may be finding a little bit of a bottom here.
Moving on to April the 2nd, and we can debate this. Did you feel, though, that a day or two ago when Trump did announce the tariffs on the car makers, that he was signalling a degree of resiliency or some workarounds and concessions, that it may not be as bad as what the headline may be indicating?
I mean, there were some hints at that, but it's always difficult to tell. And the reality is that we know what we've had in the last several weeks is tariffs announcements and then reprieves and then announcements and then reprieves. And it's been a lot of back and forth. So I wouldn't be surprised to see concessions. But again, look, this is supposed to be Liberation Day, right? It's supposed to be a major round of reciprocal tariffs. I think you could argue that markets are probably fearing the worst. So in some senses, if we see anything less than something aggressive, there could be some relief. But it seems unlikely at this stage. And, China is a particular target in our view of Trump.
Oh, yeah, and I don't think it's really even started on that front, right? We'll see what happens. But, Mitul, I'm curious. Market pricing, what's happening on Trump and tariffs, how really accurate is it? On the equity side, one guest we talked to earlier this morning was saying, look, volumes have been so thin, moves have been skewed, exaggerated, et cetera, and it's not a real accurate indication, right? Would it be better to look at currencies and also yields? Are they any better at it?
I think FX is also similarly in that way to equities. A lot of investors are sitting on the sidelines. They've, in our view, at least from the dollar perspective, the dollar's not priced in tariffs yet. And I think investors are just waiting for clarity, as probably are a lot of people. Yeah. And that's kept FX markets somewhat subdued. All this expectation, which we initially saw a big jump in volatility, well, that's come off quite sharply. So I think you could put FX in the same category. As for yields, I think that's maybe where we're seeing more of that picture coming in. We have seen yields being very restrained. Markets are worrying about growth now in the US. There is exceptionalism concerns. But again, yields are finding it difficult to get a direction because on the one hand, you've got worries about stagflation, inflation being sticky, and tariffs and what impact tariffs will have. On the other hand, you've got weaker growth. It's not a great scenario.